you launched an NFT project that became one of the largest NFT projects in the world. What did that teach you about building versus hype?
It was funny. It's a good question. So when we were launching that NFT project, there was a lot of hype going on at that time. I think if you remember sort of 2020, 2021, it was a very hype time for NFTs, and there's a lot of projects botting and doing different stuff to be able to sort of fake followers. Something that we realized when we were building the project was called Fat Cats was that in order to build a strong community and actually sell out the collection, have a good solid base of people who really supported it, was to make sure that we built that from the ground up without having to pay for those people. And so we did our whole marketing budget for that project. I think it was around $200, and we sold out a couple of hundred or a couple thousand NFTs, millions of dollars in NFTs, did tens, hundreds of millions in secondary volume. And so that was I think the best thing about that.
And you were pretty young when you were doing that, right?
Yeah, I was 19 turning 20.
So what were you doing at 19 that most 19-year-olds weren't doing?
I mean, I was in school. I had a friend who ended up launching a project, one of the first projects on Solana. His project, it ended up being super successful. And at first I asked him, I'm like, hey, can I join you and work with you on this project? He was like, basically, we're all full. Like we're about to launch. So I was like, hey, why don't I try and do this myself? And so I got together with five, six of my like best friends at school, and we started working. And from there we didn't really know what we were doing, but we learned as we went along, and there was definitely a lot of learning throughout the process, and ended up being a lot more successful than I thought it was going to be.
So you built one of the biggest NFT projects in the world, and then you pivoted to physical gold. How did that happen?
Well, the funny thing is, as I was building that NFT project, I was actually in school for mining engineering. And so I had always sort of been in the gold space. Even when I was 18, I worked at my first mine up north in northern BC. It was a gold project. And so I was involved in the industry, and around a lot of sort of mining and commodities focused people. And so I sort of took the experience with NFTs, and which was really early stage tokenization, and thought, hey, can I apply this to one, the degree that I'm getting, and two, a market and industry that I think is going to be big into the future. And when I got together with my co-founder Morgan, we he's very experienced in the mining and commodity space, and so we sort of got together. I had my experience in the sort of the crypto side of things and also mining, but then him physically really in mining. And we're like, hey, I think we can do this better. This is an industry that has not seen a lot of innovation in the last 60, 70 years, and I think tokenization has the ability to solve that and solve some issues. And that's really how StreamX was born.
So you went from mining engineer to crypto CEO. What would your professors say?
I've spoken with a couple of them actually. I went and spoke at McGill, which was my university, a couple months ago, and was speaking with a lot of my professors and everything. And it was funny, when I was in school, I was always hopping out of class, because like we started StreamX when I was finishing my degree. I was always hopping out of class, taking calls, and doing everything. And my professors were like, yeah, we sort of thought that this was going to happen. We knew that you were always doing something with the NFTs, and now this, like, we're obviously proud of you, and I think it's really cool to see. And they supported me throughout the whole thing. And so they were great.
So you guys are launching the GLDY token soon, but it's been 3 years. You spent 3 years building this before launch. Was there anything that almost made you quit?
I think there was a couple times where Morgan and I, we were in our early days. We'd raised a little bit of money from friends and family, and we were getting started. We had our development team. We were working on the product, and there's a couple times when we looked at our bank account, we are like, oh man, like I don't think we're going to be able to pay our bills this month. And I remember looking at that, and him and I being like, no, we'll get through. And Morgan helped a lot. And, we were able to bring on some really good advisors and investors at that time too, with Frank Chustra, Sean Rusin. They were two of the first, actual big checks into this that allowed us to really build StreamX. And, I think looking back at it, really realizing, hey, this was not an easy process to be able to get here, and we had a lot of really great people support us in the beginning who really believed in the vision. And back then it was still really an idea, and we were building on that idea, and those people that believed us then were super happy. And honored to be able to have them support us at that time to get to where we are now.
Okay, so explain GLDY to someone that has very vanilla investments.
So GLDY, the simplest way to think about it is you have the ability to own gold and you get paid for holding that gold up to 4%. That payment is in additional gold bullion. And so if you think about it from a simplest side, what you would have is say you buy 100 GLDY and the yield's 4%. At the end of the year, you would have 104 GLDY, which is equal to 104 ounces of physical bullion. The yield itself is through industrial leasing, and so we actually make your gold active instead of just sitting there in a vault, and it gives you the ability to get gold price exposure and the yield on top of it.
So gold ETFs will charge you money for holding gold, whereas you pay people money to hold gold. Where's the catch?
So there's no catch. There's no catch. I think we're just doing it a little bit differently, and tokenization really is what enables us to be able to do this. And so when you think about the gold ETFs, they hold physical bullion. That bullion's sitting in a vault, and they're essentially charging a management fee to be able to give you gold price exposure. With GLDY, you still get the same gold price exposure, but instead of the gold just sitting in the vault and not really doing anything, we do make it active through these leases with our partners, Monetary Metals. And so, like I said, instead of the gold sitting there, it goes onto essentially client premises like a jeweler or a refiner, and they're able to use the gold. You can think of it as them essentially renting the gold from Streamex and paying us to be able to rent it. We then are able to pass on that yield to holders in additional gold and gives them really the gold price exposure because we have title to the gold the whole time, as well as the yield that comes from it.
So gold has been around for 5,000 years. Why does it need a blockchain?
So I think it's a really good question, and I think the biggest sort of thing that we've seen in the market right now is gold tokens themselves. Like there's two large ones out there, Pax and Tether. They trade right now almost $1 billion a day and at a slight premium to gold price. The reason for this is because it is the most efficient way to actually trade gold in the world. You don't have to worry about physical settlement. You don't have to worry about the ETF management fees or anything like that. You actually have direct ownership of 1 ounce of physical bullion through the smart contract itself. And so the smart contract is what enables us to create these sort of liquid markets on different blockchain avenues, and you can trade them. And so already we've seen that it makes a lot of sense to tokenize gold and have it trade. And now the ability to add a yield to that as a security that can be held within ETFs, distributed through brokers and other channels. I think it really builds upon the thesis that tokenized gold is the best way to trade it. Now let's take it a step further and open that up to the sort of traditional markets.
If tokenizing gold is so obvious, why isn't BlackRock doing it?
I think BlackRock themselves are obviously, a very massive firm. I think they're a firm that is much more focused on buy, not build. And so, with Streamex, what we're doing, we have a very nimble team. We have a very sort of unique, expertise within our team to be able to do this. And I think the simple answer is we're able to move very fast and we're able to capitalize on this market. And so we put all the necessary partnerships in place. We've put all the technology in place. And because of this, we have a very unique sort of first mover advantage right now. And, I think the BlackRocks of the world, they're taking notice. They're shareholders in Streamex. And so as we continue to grow, we're excited to see what happens.
So following up on that, BlackRock CEO Larry Fink has said that they want to tokenize everything. BlackRock has $10 trillion in assets. What happens to Streamex when they decide to compete with you directly?
I think that's a similar point. Is BlackRock themselves, they have massive arms into everything, and right now they're very focused in a wide range of things. With Streamex, we are very focused on this one product at the moment, which is GLDY. Our ability to take market share and move fast, our exclusive partnership with Monetary Metals, which is the largest gold leasing provider in the world, gives us a very strong economic moat And so we have the ability to scale very quickly and also, scale to a point where they notice us. And so if it comes to that point, like I said in the beginning, it becomes a buyer build situation. And I think the ability for them to work with us makes a lot more sense than them having to go out and try and do the whole thing because, it's already here. And I think we're in a very good spot to show them that.
So I think a lot of people, when they think of tokenizing things, they think of digital gold, and the first thing that comes to mind is FTX. So how would I know the digital gold that I buy from StreamX actually exists?
Yeah, so that's a good question. And so there's actually a couple different avenues on how to verify your gold. And so there's one, we have a partnership with Chainlink. And so that's a third party oracle for GLDY, where you will be able to see every month we publish attestations with our auditor for the fund that proves, hey, this is how much GLDY is minted. It is backed by the same amount of physical bullion. And so with that, that's one way. The second is it is a Cayman fund that has an auditor. And so the auditor will publish quarterly audit reports as well as those monthly attestations. And so you'll be able to see and verify that the gold is actually there. And then I think if you think about it, from a security standpoint, is the gold is yours. It is you in your title. When you hold the token, it is like a receipt of ownership. And so, there's the ability to redeem if needed. And so we mitigate a lot of those problems through all that. And so instead of just, a synthetic sort of version, which happened with FTX with Luna and everything, this is the real direct ownership of gold.
So when I think of buying gold, I think of grandmas buying gold at Costco. Meanwhile, Gen Z is out there buying meme coins. Who is this for?
So I think it's funny. It's a funny question. I think it's actually for both. I think the nature of the asset, because, for example, one, it's a crypto asset, so it's a tokenized security. People, younger people like myself or sort of my generation understand that, and they have the ability to purchase it the same way that they would buy a meme coin. They log into StreamX, they can deposit USDC, and they can purchase the asset, and so that's sort of catering to them. The other way to look at it is we can also distribute it through brokers and sort of through traditional finance channels with ETFs and everything, for example. And so, the older generation is able to participate through the traditional finance rails that they know and love as well. And so we're really catering to both markets. And it was important for us to make sure that we had that, traditional finance backing and institutional backing, as well as the sort of new generation with sort of crypto and that, quote unquote meme coin generation.
So I did some research, and you might be the youngest CEO on NASDAQ right now. Does that help or does that hurt when raising billions of dollars?
I think up to this point, we've been very successful in raising capital, and I think our investors and the team has been very supportive. And obviously, over the last couple months, there's been a lot of learning, but we're in a really good spot, and I have a lot of really good people around me to be able to support and do everything. For example, Mitch Williams, our chief investment officer, he's someone who has decades plus of Wall Street experience. Morgan, my co-founder as well, very deep capital markets experience. And so, the whole team, any company is not just the CEO. It's the people that are surrounding him and everything that, those people, their knowledge and what they do too. And so up to this point, we've managed to raise a pretty significant amount of capital. We actually just closed on a $35 million funding round as well, which was oversubscribed, no warrants, very, very positive long only shareholders. And so, I think the market's spoken, and we're very happy with everything we're doing and going to continue to be able to do it.
Congratulations on the raise.
Thank you.
I think, people talk about raises, they talk about success stories all the time, but it's not always, perfection. It's not always sunshine. What are some of the biggest mistakes that you've made as NASDAQ's youngest CEO?
I think if you look over the time, I think we've done everything, in a pretty good sense. I think in the beginning, there's, a couple things, obviously, with any young company that we should look at, whether it's in terms of, who we take money from or everything like that. Speed to market was a very important thing for us, which I'm actually very happy and how fast we got to market. And so with any young company, there's going to be sort of growing pains and making sure that we, set ourselves up good. I think something important to note is with this raise, we managed to have a very clean cap table now, no debt. We have a very significant equity layer. And so even if there was, things in the past that might have hurt us, we've managed to I think, requisite those and be in a really good spot now to grow into 2026.
So for a lot of crypto people, gold has been a bit of a pet rock. It hasn't really moved that much up until very recently. What do you say about that?
I think it's what it is. Gold itself is probably the best store of value in the world. I think we've seen that this year. Gold's almost, it's over $5,000 when the US dollar is going down. I think the pet rock nature is not necessarily a bad thing. It stores value very well. It hedges against inflation very well. But now it's sort of just about taking it to the next level. It's how can you turn that asset that does provide the best store of value into an income generating asset, which what we're doing with StreamX with GLDY. And so, I think it's something where you can still have the actual value of gold while also getting the extra yield on top of it, and which turns it into a very different instrument and provides more value for investors.
So for the next decade, as a crypto CEO, for the next decade, would you bet on gold or would you bet on Bitcoin?
I think it's a good question. Personally, I'm betting on both. I hold Bitcoin. I hold a pretty decent amount of Bitcoin. I also hold a pretty decent amount of gold. And so with that, I think there's a place for both in the market. I think Bitcoin is going to continue being a more speculative investment, and so that's not something that it has reached the whole, it's a hedge against inflation or, the whole digital gold standpoint. I don't think it's there yet. I think it could at some point. But with that, I think when we see that, it'll be a lot less volatile, which people might not like. People like the volatility in Bitcoin. And so I would recommend holding both. To be honest, I would have maybe a slightly larger position in gold right now just because of sort of how the world's going. But both assets, if you look in a 10-year time frame, I think they're both going to be up tremendously, and they would both be good assets to hold.
In the last 12 months, gold has massively outperformed Bitcoin. Why do you think that is?
I think there's a couple things. I think in the world right now, and I think even today, the US dollar reached its lowest level in 4 years on the DXY. There's a lot of uncertainty in the world and a lot of sort of economic turmoil with a ton of different things happening, and the US is in a point where people are getting worried about US dollar being the world's reserve currency. And so when we see uncertainty in the markets and we see things that are happening like this, gold is the asset that people pledge to because they want a safe haven asset. We've seen them doing that over the last 2 years already in preparation for this, and now it's just been really taking off. And the thing is, I don't see it stopping anytime soon. As long as there is uncertainty in the world, which is something that I think will continue to be happening over the next little bit. Gold is going to continue its rise. It's going to stay the world's store of value, and I think it's going to be very positive for the gold market.
So gold has returned about 8% historically. You are saying that you can add an extra 4% on top. Why isn't everyone doing this?
I think there's a couple things. One is it's not easy to do this. I think two is you need to be able to have both the technology like we've built, for the tokenization of the asset. You need to have the right partnerships in place with the groups like Monetary Metals. And I think the whole yield on gold has been something that people have been looking at for a long time. And because of tokenization now, we're actually able to institutionalize it and make it something that is very scalable and reduce a lot of friction points that traditionally might have been there. And so I think we're really hitting the market at the right time when tokenization is a very real thing talked about by very large institutions. And also the gold market's at a point where people want gold exposure. And so by being able to get into both of those markets at the same time, we're in a very good spot to be able to, I think, execute and take advantage of the market that we're in.
So the global commodities market is on the scale of $140 trillion. Why does tokenization help improve the $140 trillion commodities market?
Yeah, no, it's a great question. I think there's a couple things. Tokenization itself it's a wrapper that allows you to do things much more efficiently because of blockchain technology. And so when we look at the commodities market right now, the number is a mix up of physical, of futures and derivatives trading, and sort of you take everything. With that, by tokenizing physical assets, there's a benefit to you as both a trader or as a holder, because one, you get the access to the underlying and you can actually trade the underlying commodity in a spot basis. Two, you don't have to worry about the futures, contracts roll risk and as well as hedging costs for those assets too. Say for a future, it costs you it's a 12-month future, it costs you 6%. With a spot gold token like GLDY that gives you the yield, you can get similar exposure with no carry cost. And so I think this is sort of one example on how this can disrupt and actually, may be a benefit for the commodity space while also improving trade around the world with tokenization. And so there's a ton of different avenues that you can go down. There's a ton of different things to innovate on. Streamex is obviously focusing gold right now, but advancing into many others. And I think it's really the start of something, major for the industry and a major shift in sort of how we see commodities owned, invested, and traded in.
So Larry Fink, the CEO of BlackRock, said that they wanted to tokenize everything. You spend a lot of time talking to Wall Street executives. What's one thing about tokenization that Wall Street doesn't get?
I think, I don't know if it's necessarily Wall Street that doesn't get it, but this has been a conversation that I've had quite a bit over the sort of the last couple of years. People will come to me and be like, hey, I have, 10,000 tons of gold sitting in a vault and I want to tokenize it. I'll create a massive tokenized gold product. What they don't realize is by saying that, they're saying that they want to sell it. And so, because when you tokenize the asset, you put it out into the market, the token holders now own the gold or own whatever asset it is. And they're like, no, 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 I don't want to sell it. I just want to tokenize it. And I'm like, it doesn't really work that way. You can tokenize whatever you want. I could go and tokenize a guitar if I wanted, but it wouldn't have any value because, one, you would sell it and you wouldn't own it anymore. And two, if you're not going to sell it, then who would want to buy it? And so I think that's something that is really important to note is tokenization provides an avenue for, capital generation and the ability to actually create tradable instruments on assets, but those assets no longer are yours when you actually sell them into market as tokens. And so that's been a little bit of an education piece to a number of people.
Yeah, I've met quite a lot of people in the mining industry, and they tend to be a little bit more conservative, a little bit more old school, a little bit more old fashioned. How have they been interested in this whole tokenization push? How have they reacted?
Yeah, no, I would say 100%. I think when we were getting started 3 years ago, it was still a little bit of what is that? Is it really going to be real? Like, who really knows? But I think in the last year, especially, there has been an immense amount of interest from legacy large mining projects and large mining people in the industry. And so we've had some really interesting conversations with some big royalty companies, with some executives of some big royalty companies, and even just mining projects in general. And so if you look at Frank Giustra, Sean Roosen, they're two people who are trailblazers in the mining space. They built some of the biggest companies in the world, and they were people who saw it early. They were able to come along with us on this ride very early, and we're very early believers. And now I think the rest of the market is really catching up, and we've been getting a ton of inbounds from some pretty senior people in the space, and they are very interested in sort of seeing what tokenization could do for them. Sean Roosen.
I came across them on my research. They're pretty big names. Can you tell me a little bit about what they've done?
Yeah. Yeah. So Frank himself, he's the founder of multiple multi-billion dollar mining companies, the founder of Wheaton Precious Metals, Leia Gold, Gold Corp, and a number of others. He's also the founder of Lionsgate Films. And so if you ever watched, any of those movies, Blade Runner and Hunger Games, a number of others, he's a, serial entrepreneur, businessman, a great mentor to myself, and also someone who has been a super great sort of help for us with Streamex because of his experience and breadth of knowledge. And then Sean, he's someone who's founded, multi tens of billion dollars of mining companies and sold multi tens of billions of dollars of mining companies as well with the Osisko Group. And so Osisko Gold Royalties, Osisko Mining, they used to run the largest gold mine in North America, which was the Canadian Malartic mine. And so by having these two individuals sort of in our corner and really helping us, they've helped us a lot. And, both from a knowledge and, expertise standpoint, but also from just being able to use them as advisors.
So the founders of multi-billion dollar mining companies who also happen to own film studios that produce Blade Runner and The Hunger Games, are investors in this project.
They are, yeah.
That's pretty cool. So taking a step back to look at the product itself, you will lend out the tokenized gold that I would buy. You would lend out the gold to jewelers. What happens if tomorrow Tiffany's goes bankrupt?
Yeah, no, that's a good question. One, I don't know if that would happen, and we wouldn't lease to someone who's about to go bankrupt. There's very strict underwriting requirements to it. But I'll give you the sort of the way that we mitigate against any of that. And so, one is we have a full insurance wrapper along the whole policy with very large insurance carriers. There is a second insurance wrapper on top of that with also very large insurance carriers. Third is all of the gold needs to be 110% collateralized the whole time, and they never have title to it, and so it's not part of a credit estate. And so if there's ever, it's an operating lease, and so if there's ever a default or anything from a credit standpoint, we have the ability to go and claim the gold. Also, all of the gold is RFID tagged, and so we know where the gold is at any given time, and again, we're able to go and claim it. And so, we make sure that there's no sort of gaps in the policy, and we make sure that we have the ability to claim what is ours throughout the whole process, given any sort of not good conditions. Yeah, I think it just comes down to the underwriting and the jewelers and refiners that we decide to work with. I think if you look at the groups, one is like a Callion, which is one of Monetary Metals' largest providers. They're a publicly traded company with thousands of stores. Are in this for the long haul. They are a very big group. And we make sure that when we underwrite these leases, that we have a passing lease criteria to make sure that where the gold is going is in a safe jurisdiction. They pass all the underwriting requirements. They have the ability to be fully over collateralized. They can be insured, all this sort of stuff. And so it's important for us to make sure that all of those steps are taken, and we're not leasing to a mom and pop jewelry store in a region that isn't great. Yeah, no, I think we say that a lot. Gold's been something that people have been trying to steal since it was on carriages going across the U.S. And everything was happening there. But I think for us, like I said, we need to make sure that there's a full underwriting criteria for every lease where the asset goes. We want to make sure that the gold is fully insured with two insurance wrappers with large carriers out of London. We also make sure that the gold itself is fully RFID tagged throughout the whole process. And so we take all the necessary steps to make sure that the gold is never at risk of being lost or stolen, as you said. And so I think for us, it's the probably the number one priority when we're looking at, hey, where are we going to put this gold to go on lease and make it active and earn yield for our customers. That's the number one thing that we look at. I don't think we will. I think we have line of sight to that. We're in a really good spot right now with launch coming up very soon. We're also going to be launching our silver product, and so that's something that if GLDY is at $1 billion by the end of this year, I think silver should at least be at 500 million. That's something that is going to really accelerate really quick. I think, especially with how the gold market is going. And so when we say numbers, especially as a public company, and we're giving that sort of hey, this is our goal, we're going to hit those. And we have every point to make sure that we are able to hit those numbers that we say.
So you guys have incredible momentum. You've got ETFs lining up to buy. What's one thing that could kill this?
I think world peace or any sort of stuff that makes gold all of a sudden not attractive. But I think that's something that might not be on our horizon right now, sadly. I think gold is going to continue to be a very, very hot asset. I think being able to give exposure to gold with yield on top of it is going to continue to be very attractive as we've been marketing it right now. And so honestly, I think we're in a really good spot to be able to do what we need to do, and I'm excited for everything coming into 2026.
So back to your roadmap. You guys are launching gold soon, then silver, then oil, then copper. Where does this end?
The commodities market is so large, and the commodities market itself has such a wide range of sort of tradable instruments that are used right now. And the great thing with tokenization is we can really do anything. And as long as we can put it into a smart contract, we can create a tradable asset off of it. The reason that we're looking at gold, silver, copper, oil, and gas is because they're all usage commodities. And so they're used essentially as working capital. That's what allows us to create yield on top of them. As we continue down that line and continue to look at other assets, it's simply for us, it's how big is the market and how quickly can we scale into it. And so we're pretty happy with these sort of firsts that we've came out with, but I think as we continue to scale and grow into, really something that is the company that tokenizes commodities, there's a wide range of different things, and probably things that we're not even thinking about right now that 3-4 years down the line are might be some of our biggest products. And so I think there's because the TAM is so large, there's so much we can do, and we're very excited to be able to do it while being focused right now.
So you've been quoted as saying that you're building the Coinbase for real world assets. What does that mean?
So I think Coinbase itself is an amazing company. They were able to bring crypto to the retail individual and the retail user and really make it a mainstream, asset class for people to own. When we look at tokenization, when we look at commodities, we want to be the sort of one-stop shop for people. If they think, hey, I want to own a commodity asset, we want them to go to StreamX. Not even if, hey, I want to own a tokenized commodity asset. It's, hey, I want to own commodities. StreamX is the place to do it. And tokenization is what allows them to do it easily and also get that exposure in a sort of new sense. I think in 2 to 3 years from now, owning a tokenized asset is not going to be any different than owning a traditional security. And for commodities, StreamX is going to be the place to do that and the place to be able to own and trade them.
So fast forward 10 years from now, if everything goes right, what does StreamX look like?
It's a good question. I think 10 years from now, 10 years in crypto and 10 years in this industry that we're in is a very long time. It could feel like 100. I've been in the industry for quite a while right now, and the amount of things that have happened have been crazy. And so, to be honest, I don't really know. I think we have a very clear path on where we want to get to as a company. And I think if we hit those milestones, and which we will in less than 10 years, we are going to be in a big spot. And like I said, the commodities market is so large, and the amount of assets that we can create and the amount of innovation that we can do within this industry is so big. When you think of like the Coinbase for real world assets, I think that's a real possibility. And I think we have the ability to be the leader in that space and, the primary area for commodities to trade worldwide. And I think that's something that is, not really pie in the sky. I think that's something very doable. And we are on a very good path already with our first asset launch to be able to do that. And now as we bring others to market, it'll really sort of solidify that thought.
Gold ETFs are decades old. Why hasn't anyone ever thought of creating a yielding gold ETF?
So what's interesting about that is there are currently yield-bearing gold ETFs. However, they have a couple things that are not great with them. And so with the yield-bearing gold ETF, what they do is it's primarily financial engineering. So, selling covered calls to get a small yield. But what happens with that is they do not get direct gold price exposure. And so you might get the 6% yield or whatever they're headlining. But if gold goes up 60% or 100% like it did this year, you would not see that 100% increase. That's because they don't have access to the underlying and aren't able to do it like the way that we do it. And so when we think about this right now, GLDY gives you direct gold price exposure. And so it should trade at the spot price of gold. And then it also pays you in those additional ounces of gold, which gives you the yield on top of it. And so the way that we've set it up, that was enabled through tokenization and through the actual smart contract infrastructure. And then the yield bearing through leasing with Monetary Metals is the first of its kind. And I think we're at the sort of forefront of this. And, it's because of our team and the way that we've been able to put this together and move fast in doing this. Yeah, so for GLDY, $200,000 minimum. That's to satisfy the accredited investor requirements. And so, I think with that, because we're going to be working with ETFs as well, it'll give ability for retail investors to participate. And so when we think about it, if you want to buy the GLDY and own it directly, there is that $200,000 minimum. But if you are a retail investor who wants exposure to GLDY, you can go buy a GLDY ETF. And so we may be creating a 100% weighted GLDY ETF where you can get the same exposure just in a different wrapper. And so it was, like I said, important for us to be able to harvest to both the institutional client as well as the retail client. And that's through the traditional finance channels. So, say, for example, when we create a 100% weighted GLDY ETF, you can go and buy that ETF and get GLDY exposure. Right now on launch, that sadly won't be a possibility just because we do have those minimums and those are regulatory requirements. But as the market develops and as we create these ETFs with our partners, you will have the opportunity to participate.
Gold has had a tremendous year in 2025. What's your view for how gold's going to perform in 2026?
I think it's going to be more of the same. I think with the world as it is right now, and with everything with the U.S. dollar debasement and inflation and all these sort of macroeconomic trends that we're seeing, I think it's going to continue to be a very bullish year for gold. And I didn't think gold would hit 5,000 in the first month, but I think that's showing the amount of interest that is in the asset right now. And so I think as we scale through 26, we could see some pretty crazy numbers. And if you look at the sort of the gold runs of the past, we're sort of halfway, if not a little bit less, there in terms of the percentage returns that we've seen. And so I think it could get pretty interesting still. And I think we're still in the early stages of what it might look like.
So when the price of commodities like gold is as volatile as it is now, when the price of gold shoots up, does that increase demand for borrowing from the people who are borrowing from you guys?
Yeah, it's a really good question, and the answer is yes. And so, with the jewelers or refiners that are using gold as working capital, when gold price is volatile and when gold price is going up, it increases their demand for leasing because it's a much easier avenue for them to finance their working capital requirements. If you think about it in a simple sense, from a jeweler, for example, say you went with the traditional avenue and you got a loan from a bank to be able to go and buy gold. So you got a $100 million loan, then you would be able to go out and buy, say, $100 million worth of gold. But if gold goes up, say 100% like it did this year, all of a sudden your $100 million, you are only able to buy half of that in actual units of gold. So as someone who's using gold for creating jewelry or whatever, that really hurts you. And so with leasing, it negates all that and it gives you the ability to lend in ounces, repay in ounces. And so it provides essentially the perfect hedge for them. And for us, it shows a lot more demand. And we're actually seeing right now lease rates going up, not down, even though the Fed is cutting. And so it's a unique sort of uncorrelated effect. As gold price continues to increase, we anticipate seeing more demand for the gold itself. Yeah, I think it's a very good point with silver as well and with gold in any sort of volatility. Jewelers do not like that. They do not like the volatility. It causes them to constantly have to reprice, to hedge out their positions with traditional borrowing. And it also reduces the amount of silver or gold that they can borrow and it increases the rates on what it costs for them to be able to do that. So for us, as the provider coming in with monetary metals through leasing, because they're able to borrow in ounces and repay in ounces, it gives them the ability to, create that perfect hedge and also gives them the ability for them to not have to worry about price volatility as much, which is very positive for them, which is why we're sort of seeing so much demand in the space right now.
Walk me through an example. Let's say I invest $100,000, $200,000 tomorrow. What does it look like by the end of the year?
Yeah. So if you say bought $100,000 tomorrow in GLDY, you would get 100,000 ounces or $100,000 worth of gold back. And so you would own that in GLDY tokens. By the end of the year, what you would see is, depending on gold price, you would see that increase or potentially decrease, but I don't really see that in gold price in your GLDY holdings. And then you would also see the 4% yield on top of that. And so if everything was stagnant and just for round numbers, say $100,000 was 100 ounces of gold, at the end of the year, you would have, if it was 4%, you would have 104 ounces of gold. And then, given the price change in gold, you would be able to see that as well. And so it really gives you that ability to get gold price exposure with the yield on top of it. I would say, hey Larry, it's a pleasure to meet you. I don't think we're at a point where that necessarily makes sense. I think we see a ton of more growth. We're in a very good spot to be able to accelerate, and so the price that we're at right now is not the price that I think we're going to be at, going into the future. And so as we continue to prove out the model and prove out our business case, I think throughout this year it's going to be a very very acceleratory year for Streamex. And so I'd give him my number and tell him to call me back in a couple of years and maybe see where we're at.
BlackRock invested $47 million into a competitor. Are they a threat? Are they a potential acquirer? How are you thinking about this?
Yeah, so I think the competitor Securitize, I think is who you're speaking about. They're looking to go public right now, and I think with Securitize, one, they're a great company. I've met their CEO. They do quite different stuff than us. Their primary focus right now is really in one, treasuries as well as private credit and tokenization of private credit. I don't think they're too involved in the commodity space just yet. And so I would see them much more as a group that we would look to partner with and work together with on these tokenizations initiatives rather than a competitor. One, because they're doing such different things, and also because I think there's a ton of different synergies between our two companies. And we've had conversations with them and going to continue those conversations.
BlackRock's tokenization efforts seem to be concentrated more along the lines of credit. You mentioned Securitize is more involved in private credit. BlackRock's product itself, they've tokenized bonds. You chose commodities. You chose gold. Why did you make that call?
Well, I think one, because of our team's experience in the space, and we understand the commodities markets, we understand the gold markets very well, and we saw the sort of the growth of the market 3 years ago when we started doing this. I don't think we thought that gold was going to be at $5,000 right now, but we saw that it was a need for people to be able to hold these commodities and trade these commodities in a different way. And so I think that's one of the biggest things that we sort of focused on when we were doing, starting Streamex initially, and just looking at, hey, who are the people that are around us, and what do they understand? What is our experience as a team? And where do we sort of see the world going? And so that was commodities. And I think commodities are going to continue to be a very important market for the world. And it also gave us the ability to have sort of a niche and a very big TAM to access. And that's been our goal, and it's what we're going to continue to do.
So gold has had a tremendous year. It's up a lot. Bitcoin, not so much. What's your prognosis for Bitcoin in 2026?
I think Bitcoin itself, it's such an interesting asset. It's people wanted to call it digital gold for so long, and I think we've seen that it is uncorrelated to gold, especially in times of turmoil and economic uncertainty like we're in right now. I think Bitcoin is going to have its day. I'm going to continue to hold the Bitcoin that I own for the next 10, 20 years. It's not going anywhere. It's sitting in my ledger, but 26 might be a tough year for Bitcoin in gold terms. And so, if I was an investor coming in right now and I had, $100,000, would I put it into Bitcoin or would I put it into gold? I'd probably put it into gold at the moment. I think it's going to be an asset that outperforms this year for sure.
So a lot of young people might be looking at you and thinking, okay, that guy, he's the youngest CEO on NASDAQ. What can I do to become more like him? What advice would you give to a young person right now?
Um, I don't know. I think for anyone, and I think the biggest thing that I've sort of thought throughout everything that I've done is just do it. Try it. It might not work out. I have a wide list of failed projects that I tried to launch over the last number of years that didn't really pan out, but they were learning experiences and taught me, hey, this is what went wrong. This is how I can build upon that. And so Streamex itself also was not an overnight success. There's no such thing as that. It takes hard work. It takes doing it every single day for years on end. And so when you want to do something and you have a good idea, I would say just do it. Like, take that leap, really look and figure out what it is that you like to do and what you're passionate about. And then from there, if you can figure out how to build something upon that, you're going to have a lot of fun doing it. And it might not work out the first time, but the second or the third, it might. And so I think that's the biggest thing for me is go out there, do it and see what happens.
Okay, so as a young CEO, you must be getting a lot of advice, some of it solicited, some of it unsolicited. What's the best advice that you got that you ignored?
Oh, that's a good question that I ignored. Um, Honestly, I think so much of the advice that we've gotten now that especially since we've been public, a lot of the solicited advice, speaking to advisors has been very positive. And, there are people who have a lot of experience in the space, block out the noise, focus on what you're building has been super positive. I think being a public company, there's always people who are, there's investors in a company and then there's investors in a stock. And so I think when speaking to people who are or only focused on the share price and not necessarily focused on the fundamentals of the business, they can provide some negative commentary to what you're looking at. But I think with myself and the rest of the team, we make sure to listen to everyone, but we want to make sure that we also have our own opinions and a very strong team to be able to make these decisions. And I don't make any decisions on my own. We make all our decisions together, myself, Morgan especially, and that's I think been very positive for us.
Okay, what about the worst advice that you've received? What's the worst advice that you got that you followed?
Um, the worst advice, I think, the I don't know. I think there's a number of things. I think with anything when you're building a company, there's always, like I said, people that are looking for sort of short-term hype and people are always looking for news as a company as well. I think it's important when you're running the company to make sure that the news that you put out is actually real and beneficial for the company itself and not just sort of fluff pieces that are just going out there like a press release for the sake of a press release. And that's something that I think is very important for us as we move forward. And that as we grow as the company, we want to make sure that the information that we're putting out to the market is very real and actually has an economic benefit to the company. And so I think that's probably the biggest thing.
All right, got it. In one sentence, why should someone buy GLDY?
If you like gold and you want to get extra returns on your gold, GLDY is the asset for you.
All right, is there anything that we haven't discussed so far that you want to highlight?
No, I think that was perfect. I think with StreamX now, when you think of StreamX, you think of GLDY, you think of all the other assets we're going to be launching. Is from a company standpoint, we're in a very good spot. We have a significant amount of capital right now. We are, no debt. We got rid of all the debt on our balance sheet. We are coming into product launches. We're going to continue scaling. And so I'm very excited for everything to come into 2026. And, I'm more than happy with the team that we've built and the people that we've been able to get involved in this and, really, really show what we've been doing and deliver on the promises we've made. And I think we're in a really good spot to be able to do that.
Commodities and mining, these are such old school industries, full of very, very conservative people. And here you've got a super young tech CEO coming in, potentially revolutionizing the way things are done, doing something that hasn't been ever done before. What do you think is one thing about the industry that most people get wrong?
I think the mining and commodities industry specifically is people always thought about it as sort of like the old school industry and people didn't really give it a whole lot of love over the last couple of years. And I think, when we look at it, and especially people of my generation, whether you're protesting the ability to, for oil tankers or pipelines or anything like that, and then driving there in your, car that uses gas. There's a lot of hypocrisy, I think, in the space, and people like to give a lot of negative connotations to mining. But when I think you actually become part of the industry and you sort of see how it works, is one, the environmental aspect of mining is one of the most important things, especially in Canada, where I'm from. And so that's something that is very heavily regulated as well as very heavily mitigated. And then I think also, if you can't grow it, you need to mine it. And so that's something that I think people don't really understand is everything that they interact with every single day. This computer that I'm doing this interview on, the phone that you type on, that all came from somewhere, and it didn't fall out of the sky. People physically went into the ground and mined it, and refined it, and turned it into these assets that we love and use every single day. And when you think about that standpoint, maybe give it a little bit more love. And I think now that obviously the prices are high and people are realizing that it's industries that matter, it's getting a lot more sort of education from people and a lot of more interest. But that's a really important thing, I think, for people to realize is it is the backbone of a lot of countries' economies. It's a backbone of Canada's. It's U.S. especially with oil and everything. So I think that's really important to note.
I mean, I think there's a very important point there. What is like if you make mining impossible or if you make mining very hard to do, then inevitably all the physical things that you have around us are going to get more and more expensive. The other thing I wanted to mention is mining famously operates in these boom and bust cycles whereby prices go up, people invest a ton of money into mining, into infrastructure, into mining, getting things out of the ground. And then prices go down because there's so much extra capacity, and then people don't invest for a while. Now, commodity prices have gone up a lot, but one of the interesting things is that investors haven't actually put that much more money into developing new mines. Do you think tokenization might change that?
Yeah, no, it's actually a really good point. I think what we're seeing right now in the market is because gold prices are so high, projects that were once uneconomical are now very economical to be able to mine. The problem is to get those projects up and running and actually start either taking gold or whatever metal it is out of the ground. It does not happen overnight. It is a very long process. And so these guys that 2 years ago when gold was down and it wasn't very attractive to invest in, they're all clamoring for money. They're being like, hey, gold's at $5,000. I want to go and mine my project. What they don't realize is it's like 12 years, if not longer, to actually be able to take the first ounce of bar of gold out of the ground. And so in these cycles, what we normally see is when it's at its peak like this, money starts flowing in, and investment starts happening and people start building these projects. But then as the cycle whether it goes down or sort of levels off a little bit, it's a very long lag time to actually see new metal come out into the market. And so the ones that really benefit are the ones that are already operating and manage to get through those bear cycles. Because when the bull cycle is going, they're already there. They're already producing metal. They're making that money from the actual price increase. Whereas a lot of the junior miners or people who are in exploratory stage, they can raise money now, but it's going to be a while until we actually see new assets come out of the ground from them. Well, tokenization, one, it provides a very new funding avenue, I think, for these projects, and it provides the ability for not just the junior mining projects, but even the producing mining projects to earn additional capital from the gold or the other metal that they produce. So I wrote an article called tokenization turning commodities into perpetual value creating assets. And so like with our business model, for example, the ability to take transfer fees, earn the yield, et cetera, off the asset, you can now, instead of just mining the gold and then selling it, if you tokenize that gold, turn it into, say, GLDY, you can get the yield off of that gold. You can also get the trading fees off of that gold. And so instead of just a one-time sort of payment that you get from selling it, you can turn that into an asset where you can sell that into the market, get your spot price back, and then continue to earn fees off the asset itself. And so this is something that I think is very interesting when you look at it, and especially the large miners and the Agnicos, the Newmonts, the guys that are producing massive amounts of metal out of the ground. It's something that I think will start to catch up to them and be a very interesting conversation to be able to have.
All right, excellent. Thank you very much.
Amazing.